What's going on, guys? Benny Childs, founder of the Teach Me to Fish Effects Trading and Investing Community. Back with a quick S&P 500 futures weekly analysis. All right. Again, this is going to be for ticker symbol ES1. All right. I'm just going to start off on the monthly chart since we're pretty much at the beginning of the month. You guys see here I have our monthly dealing range starting at $4,302.25 and ending at $5,721.25. Discount for the monthly dealing range is $5,011.75. So just for a healthy market, we're looking for the market to come down at equilibrium or somewhere down into discount, which will be at or below $5,011.75. I have marked out some fair value gaps that the market could typically find support at. We don't know how deeply it will retrace. We do have, and I'll annotate this, but I'll take it off so the chart isn't convoluted, but we do have a monthly unicorn breaker right here. Let's do it like this. Unicorn breaker. All right, that's our monthly unicorn breaker. We can see that the December 2023 candle broke the breaker, and the January 2024 candle came in and litigated that breaker. It doesn't mean that it won't come back down to that point, but I just want to point out it's already been litigated, so it may not go down that far. So I'm thinking that the first fair value gap that we have here, starting at 5,000 flat and ending at $4,969, will be the fair value gap that we find support in. But time will tell, the market will tell. The market does what it wants. So we'll see. Let's drop down to the weekly. Let's take a look at some of the things I have here for the weekly. This past week's candle, we see that it closed below this fair value gap here, creating a inverse fair value gap. All right. I am expecting the market to at least span, my apologies. I'm expecting for the market to at least expand to the downside to $5,331.75. However, I like to see whenever I'm looking for an expansion downward, I want to see some type of litigation to the upside, whether that is internal liquidity or external liquidity. So for this upcoming week, I would like to see it trade into this inverse fair value gap. Go ahead and get the retest before heading lower. That's what I would like to see. All right, the inverse fair value gap is starting at $5,450.25, and it's ending at $5,489.75. All right, now we know that these PD arrays, they can be traded through. All right, they can be traded through, so it's very possible that the weekly candle can trade up into, right, this inverse fair value gap and wick outside of it to the top side. But as long as it doesn't close above it, then that is still a valid bearish PD array. Okay, let's take a look at the daily, and we'll stop on this time frame for this analysis. We see that we have a new daily dealing range starting up at the top there at $5,600.75, and it's ending at what is that? Let me just take a look at the low. It's ending at $5,331.75. Now we do have my apologies, was checking, but we do have a volume imbalance, a daily volume imbalance, all right, sitting right here, starting at $5,464.25 and ending at $5,480.25. Now, what did the daily do? The daily closed below this daily fair value gap right here, right, which essentially took out the BISI, or the bullish fair value gap. So that has been disrespected. That is null and void. It is actually a inverse fair value gap. Okay, so we see that in that dealing range. I'm sorry for the birds, but we see in that dealing range, the equilibrium is $5,466.25, and anything above that will be premium. And again, we do have a daily volume imbalance sitting inside of that weekly inverse value gap, as well as a order block. So we could see price come up into that point and go ahead and push lower to our or my weekly sell side draws on liquidity. Now I do have other weekly draws on liquidity marked out. So the first, as I stated, is $5,331.75, and we'll be looking for $5,270.25, as well as $5,028.25, which will put us very, very close to the equilibrium of the monthly dealing range. So I feel that we're still in a bullish market. Long-term investors, you guys want to make sure that you're dollar cost averaging. If you're doing it weekly, you want to go ahead and put your orders in for the opening bell on Monday. If you're doing it daily, you can also go ahead and put it in for the opening bell on Monday, since Friday was a bearish day. Okay, so that is going to be my weekly analysis for ticker symbol ES1, which is the S&P 500 futures. And so we'll just see how that plays out. All right, guys, as always, great health and wealth to you, and safe trading and investing. Talk to you later. Bye.